All right, so here's day 29 of my journey to a $500,000 stock market portfolio. Not looking good. Markets are gradually dropping, as you can see. I've got a total equity of $75,410. So you can see that it dropped hard since it was once at 82,000. This drop in equity can be explained by these positions here. Novavax, a drop of 5,400. So I initially bought Novavax to do a covered call trade. I collected almost 40% in premiums, but then the stock decided to drop even more, 87%. So as you can see, I'm down 5,400 on the stock purchase itself, but I already collected about $2,000 in premiums. Overall, I'm still down a lot. I've got Yeti where I'm down 873. It's not so bad. And Square, I'm down $746. And L Brands, I'm down $700. And that's just my RSP. If you look at my TFSA, I'm down almost 2,900 on Teva, 1,800 on Grubhub. Although Grubhub, I'm not too worried about. 1,600 on Giuseppe Energy. 1,400 on Neo. Neo is terrible. I bought it at 5. It's trading at 1.32. Looks like it wants to go to 0. Down 1,300 on IMGN, down 1,000 on Afria, down 600 on Bed Bath & Beyond, but not too worried about it. Earnings is coming out soon. We'll see what happens after earnings. Down 400 on FCX, 400 on Halliburton, but not worried about it. And down $300 on 100 shares of the Qs. Not so bad, actually. And then in my margin account, down $2,500 on United States Steel, $600 on Box, $1,000 on Uber, $500 on Zillow, and the rest are credit spreads. So I have an Apple Iron Condor expiring October 11. My limits were 232.5 and 207. Yesterday, Apple was trading close to 229, but it dropped back down today to 222, making it safer. Now the problem is I've got less than 2 weeks for expiration. I can probably close the trade early, but because of commissions, it's going to wipe out a big part of the profit. So I collected $79 credit when I initially opened this trade, and I can close it for about, let's say, $45. So I'm left with $34 profit, but minus $16 of commissions in and out. That's $18 that I'm left with. So kind of frustrating. It sort of forces me to wait until expiration and have them expire worthless. That also forces me to take the risk longer. Got this Amazon put credit spread expiring next Friday. I've got it at 1760. Amazon is at 1720 now. So this one's in trouble. Got another one though, another put credit spread on Amazon at 1665. So this one's okay. I've got an Iron Condor on Chipotle Mexican Grill. It's trading at 829 now. My limits are 890 and 800. So it's on the call side, it's very safe. In fact, it's probably all profit. But on the put side, it's kind of close. Got this Iron Condor on DIA that I believe I opened yesterday. So upper limit is 278, lower limit is 253, and the stock is trading at 263 right now. Expiring November 15, so I still have a lot of time. I've got another Iron Condor on DIA expiring October 18. Upper limit is 278, lower limit is 262. So you can see that the lower limit is getting tested, but I still have 2 full weeks left. The upper limit is probably all profit right now. I've got a put credit spread on FedEx at a 138 limit. It's trading at 140 right now, so it's getting close, but I have 3 full weeks left. I've got an Iron Condor on IBM expiring in a week. Upper limit is 147, lower limit is 137. IBM is trading at 142 right now, so relatively safe, but it is kind of tight. I've got an Iron Condor on IWM. Right now, IWM is trading at 147. Sorry, I mean put credit spread. So my lower limit is 140. IWM is at 147 now, so still got some room, but this one's expiring November 15, so I still have a lot of time. Now this is an Iron Condor on IWM. Lower limit is 145, so you can see it's very close to the 147, but I have 3 weeks left. Upper limit is 160. So Netflix closed the day at 269 yesterday, and you can see today it's starting at 262. So this put credit spread at 255 was doing better yesterday, but now it's going to be a little bit close. I've got this other vertical put credit spread on Netflix at 235, so this one's safer. And then I've got this Iron Butterfly on Netflix at 275. It initially started at an Iron Condor with lower limits of 275 and higher limit of 317, but I brought the higher limit down because Netflix was trading in the 260s. So now my lower limit is still 275. The stock is below the lower limit, so I'm definitely in trouble on that side. But I've collected a lot of premiums from this, so my max loss is not going to be that big. And I still have a full week, so who knows. So I've got this iron condor on Nvidia. Upper limit is 200, lower limit is 160. It was doing better yesterday, but today, of course, it's getting closer to the 160. As the general market drops, of course, this is going to drop. I've got a put credit spread on Roku. Lower limit is 85. It's trading at 101, so it's 15 points away. I still have time though. I've got an iron condor on the Russell 2000 index, so it's at 1493 now. My upper limit is fine, but my lower limit is getting close, 1465. But I have until October 25th. So if the market has time to recover, hopefully, if that's what it plans to do. So I made this earnings trade yesterday. It was an iron butterfly on Stitch Fix. I saw that the expected move was about $5. If I did an iron condor, $5 out on each side, the premiums were so low, it wasn't worth it. So I did an iron fly instead, where I sold the short strikes at exactly where the stock was trading at, which was $20. And the wings, the protection, were $3 out. So I collected $250, risking $50. So my max loss on this trade is $50. My max profit is $250, but to achieve max profit, Stitch Fix would have to trade at exactly $20 come October 4th. So it's unlikely to reach max profit, but anything in between is good. My break evens are $17.50 on the low side and $22.50 on the high side. So anything in between that will be profit. Not the exact same amount of profit, but will be profit. Obviously, the closer I am to $20, the higher the profit. But now Stitch Fix, as you can see, pre-market is trading at $17. So it doesn't look like I'm going to be making any profit on this, because it's below my break even of $17.50. So this one looks like it's going to be a max loss of $50, similar to Nike. But I have until October 4th, so I'm not going to close it early for a loss. I'll wait until Friday. Maybe it'll come back up above $17.50, giving me some profit. So either I close it today for a $50 loss, or wait till Friday and close it for a $50 loss. It's the same thing, so it's worth waiting till Friday to see if there's a chance to make some profit. So Shopify, I've got an iron condor on Shopify. $400 on the upper is my upper limit, and $300 is my lower limit. It's been testing the lower limit for a while now. The upper side is completely profit, but I still have 2 weeks. So I'll wait it out a bit. Now I've got a bunch of put credit spreads on SPX and SPY. Now they used to be safe, but now with the markets dropping, they're getting tested. But I'm gonna hold on to it because I still have time. This one's expiring October 18. Another one's expiring October 18 on SPX, but it's at a lower strike. And then I've got an iron condor on the SPX. So the higher side looks safe where we are now. But then the lower side, 28.85, is a bit tested. But another one November 15, so this one has a lot of time. I don't have to worry, but the lower side is getting tested, but I still have a lot of time. And the call side, I think it looks pretty safe. I've got to put credit spread on the SPY at 284. Right now we're at 289. Not good. Got another put credit spread on the SPY expiring November 1st at 282. And then I've got another iron condor on the SPY expiring October 30th. 307 on the high side and 287 on the low side. So that's not good. The 287 is getting tested for sure. But this is definitely a chance to do another put credit spread on the SPY. So I'm going to do that right now because VIX is so high. So there's a lot of volatility. So it's a perfect time to sell premiums. So I'm going to do a put credit spread on the SPY 30 days out. And here, what I like to do is to look at the expected move. So 30 days out is about November 1st, okay? And I'm gonna look at the expected move by looking at the money premiums I can collect from both the call and the put side. So we're at 289. So let's go 290 just to see how much premiums I can collect. So you can see that the expected move is about 12, so 6 plus 6. Let's say $13 just to be safe. I'm gonna go $13 lower than the 289 on the put side. So 289 minus 13 is about 276. And then I'm going to go $3 wide. So 276 minus 3 is 273. I don't know if I should sell the call side. I think it's, let's see what I can get on the call side. Let's say 290 plus 13 would be 303. Let's go to 305 on the call side because I think it has more room to go up if the market recovers. It'll go up faster than it's going to drop right now. So let's see what I can get in premium. So it's not worth it. For $20 on the call side, it's not worth it. $20 on 300, while on the put side, I'm getting about 50, almost $50, yeah. So here's what I could do. I could ignore the call side for now and just sell the put side, expiring November 1st, 276 strike. I'll sell 2 contracts, $3 wide. So collecting about $46, but risking $250. But I'm going to try to go to, let's say, 50. Send order. I'm going to send order. So 276 put and 273 put, $3 wide, but 2 contracts. So a total of $100, $8 in commissions, expiring November 1st on the SPY. Let's send order. So I went a little bit higher just in case, just to give room for the markets to drop. Now let's look at the order. If I go back, click modify. So yeah, you can see 50 is more on the ask side. If I want the order to get executed right away, I would pick the price at the bid side. But I'm giving room for the SPY to drop a bit more. So if it does, then the price on the ask side has a better chance of getting executed. So I'm basically trying to collect a few extra dollars. Now let's look at Stitch Fix. Let's see if I can close it. So I tried 160, let's try 170. Remember, I collected $250, so at 170, I'm happy. If I can close it at 170, nope. Let's see here, 235, 240, yeah, so it's about $2, it looks like. If I want to close it, I'll have to go up to $2. Let me go to 180. Yeah, still nothing. I'm gonna wait it out. So I've got this Tesla vertical put. This is the only one that's doing good right now at a 200 put. Tesla's at 242 and expiring in 3 weeks or 2 weeks. So I'm pretty good there. I could actually close it early, but I don't want to spend the commission, so maybe I'll hold on to it. So yeah, that's basically it for my portfolio today. So if you have any questions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.